And thank you very much for stepping in at short notice. We wish Hazem a swift recovery. Obviously, kicking the staff has a downside. We've got about 15 minutes. We don't want to run too much over that because of the time. What I really want to do with this interview is to get the perspective of, I think it's fair to say that you're Egypt's leading investment bank. There may be some that disagree with that. But I certainly think you have a right to at least aim for that title. I want to get your perspective as a financier, as an investment banker, on some of the major topics that we talked about, particularly with the ministers. So let's start with the IMF. My feeling, and I think the impression of the international financial media, is that this is a pivotal agreement for Egypt. It is a declaration of faith. It is the corner that everybody feels Egypt needs to turn. How do you see it as CI Capital? I mean, are we, as internationals, as foreigners, as outside commentators, are we putting too much emphasis on it?
No, well, first of all, CI Capital excels in providing services to institutional clients, whether local or international. So no doubt the past couple of years, the macroeconomic challenges have had their toll on our clients. The way we see the IMF agreement is that it is not and should not be perceived as an objective in and of itself. We all see it more as an important milestone in the right direction as far as Egypt's economic reform agenda is concerned. Having this agreement in place would clearly show Egypt's economic reform intentions to the business community at large. And we believe it sends a couple of very important messages. Well, first of all, is that Egypt is serious about economic reform. And that economic reform will be with the primary objective of restoring macro stability and supporting economic growth. And that growth has to be job creating and sustainable as well. And no doubt this will have to be done through several measures, including reduction in budget deficits, improving balance of payment, reducing unemployment. And all of this, as was mentioned earlier in the morning, will have to be, again, done in a way which provides a safety net for the most vulnerable segments of the society. The other important thing that the IMF deal would convey is that it says that Egypt has already secured multilateral and bilateral financing arrangements and will tap the international bond markets probably in the coming weeks or months. Last but not least, I think, having the agreement and as a condition subsequent to it, and I would clearly put this as a condition subsequent, there will have to be a devaluation of the Egyptian pound to reflect its true value. And more importantly, a more flexible FX regime will have to be adopted versus what has been done in the past couple of years. Now, I think all of this economic reform, we all realize, or should realize for those who don't until now, that this is not a walk in the park. And it will be a very challenging times ahead. The good thing is that there is a clear reform plan in place. There is the political will to execute and deliver on this plan. And now we have the financing cushion, which would help the country navigate through those tough times expected ahead. So all in all, we are optimistic, and we think we are at a turning point. And the country, I like, by the way, the slogan of unleashing the beast, which was said in the morning.
Yes, so I think that's going to be, I think I can see many newspapers and others.
I personally like it, and I think, it is a turning point, and things will get better in the coming year. And again, CI Capital, as the investment bank and broker of choice for most foreign institutions, we believe we stand to benefit most out of this.
I mean, do you agree with my premise that international investors, and both portfolio and direct, I mean, FX is a big issue, and we'll come on to talk about that in a bit, but they lost confidence in the ability from the macro side, not just of stability, but of sustainability, because clearly the last 5 years, they've been very challenging times for the country. But, that budget deficit, the fact that a lot of it was funded from the local banking system and, grants from other regional countries, which, you're never quite sure whether those are going to continue. So there was a lot of question marks over that. But the IMF, the bond issue, the other multilaterals, the bilaterals, it seems now to be a point where you can say, okay, these people, all of whom have done their analysis of the country, have given their agreement to engage very productively with Egypt. And from a private sector point of view, it's at that moment that you say, okay, if they're there, that gives me confidence that I should be there too. Is that a premise that you agree with?
Of course, and simply put, again, the IMF agreement, I mean, it basically says, we have an issue. We found a way to deal with that issue, and this is the funding required to sort out this issue. So I think that should give, comfort to most international investors.
On the FX question, I mean, Chris Garnett mentioned in his opening speech, I'm going to try and find this, a poll that we did. Mm-hmm. And one of the questions in the poll was, well, I think it says, what do you see? But I think, where do you see the Egyptian pound being at the end of the year to the dollar? And we quoted three rates. One was 9.5, mm-hmm. 18% said it would be there. 55% of people said it would be 11, and then 15, and a full 27%, so nearly a third, said it would be at 15. I mean, you mentioned a devaluation, you mentioned some form of flexibility, so not a free float, but a managed float, which, to be fair, was what the previous regime was. I mean, where do you see the pound going, and what's the timeline for that in your mind? I mean, if I was a portfolio investor and said, I don't want to come in until that has been dealt with, that's my final challenge, what would you advise me? How would you give advice to an international investor?
Well, I mean, if devaluation is imminent, and I think it is, well, it's only prudent that you would stay until you would stay and watch what will happen, and then you would basically inject funds afterwards. After all, I mean, any gains that you would make can be simply wiped out if significant devaluation happens. Again, I wouldn't say my view, but I would say the firm's view.
Sure.
Yeah, I think we believe that. Some reduction in the value of the currency will have to happen, and it would have to be a meaningful reduction. So we would be more of the view of the pound being devaluated in the range of 11.5 to 12 pounds. Anything below this is really not meaningful. And again, if we keep on devaluing the pound by very small increments continuously, I don't think that's the best thing to do. So we think it's in that range, and we think it is imminent, and ideally before year end.
Let's talk about CI Capital and how you've developed particularly over the last 5 years. I mean, you've been in business for longer than that, but as I said, it's not been the easiest of times to operate in the financial sector anywhere, but Egypt, you had the extra burdens of the issues that were happening here. So in what way do you feel the firm has changed over the last 5 years? What are you looking at now that you didn't look at 5 years ago? Is it different in terms of the clients that are looking for your services? What's the difference?
I think a lot has changed over the past couple of years, and I would like to think, that yes, we are the leaders in the local market. There has been a change in management which took place in 2013, and with that change in management, there has been change in focus as well. So CI Capital historically was a mid-market, mainly M&A advisor, and with the new management in place, we saw that this kind of segment and type of clients, there are very little barriers to entry in terms of the quality of advisors required. And hence, I mean, there was extreme competition. On the other hand, given a company of our size, our reach, and, with the prominent shareholder that we have, which is Commercial International Bank, we thought we can achieve much more. And we saw the opportunity in, big and complex transactions, which were dominated by a single single, player in the Egyptian market for quite an extensive period of time. And this
I
is,
had no idea who they are.
This is where, we saw the opportunity to compete heads on. And I think we're all proud of our track record in the past couple of years. We have earned, significant, awards on an annual basis. We have been part.
Have we given you an award? Not yet.
Yes, I think so.
Oh, good.
I think so.
I'm glad.
My colleague Hisham Gouar is there, actually the head of investment banking. So no.
No, we haven't, have we? I didn't think we had. Well, it's nothing to do with me, but anyway.
Oh, we'll get it sooner or later.
We'll get it. Yes, I'm sure. So you're doing more and bigger things and competing with that other company whose name I forget. But where do you see, so I mean, looking forward, we've got about 5 minutes left. I mean, that's where you are now. These are the type of people you're advising. You're very much in the same sort of world as Euromoney. If you were advising an international client, if they said, let's say it was a financial investor who had a remit to look at emerging markets, who was on the sidelines, where would you advise them to look at seriously in terms of sectors or opportunities? What do you think's got the highest potential for, growth and change over the next 2 or 3 years?
Well, I think that there are several interesting sectors in Egypt. Again, the significance of investing in Egypt is that, the fundamentals of the country remain strong, and those of the economy remain very strong as well. So I would generally, see potential in financial services, be it banking or non-banking financial services. That sector have shown a lot of resilience even during tough times. We see a lot of opportunity in consumer-related sectors, so that would include, healthcare, it would include education. The other, it includes food and beverage as well. The other sector where we expect significant, pickup in the coming period is logistics. With all the, investments done in infrastructure in the past couple of years, and all the new projects, like the Suez Canal Economic Zone, there should be a lot of interest and a lot of potentials in those sectors at large.
And in terms of, is it an equity play? Is it a corporate debt play? Is it a private equity play? What do you feel are the sort of ways in which financial investors should or could get exposure to the country?
It's a combination, actually, of all of this. So generally, we expect, a revival in ECM transactions in the coming years. So that would entail a lot of, direct investment through, the capital market. Private equity as well should play a big role in this. And naturally, all of these big projects will require financing as well, bank financing, I mean.
So there's a combination of different ways.
Yeah.
From a direct investor point of view, from somebody who is looking perhaps either to acquire or to do greenfield, brownfield, is the sector story the same, or is there sort of assets like real estate and other things, tourism perhaps, that are worth looking at? If I was a corporate, what would you recommend? Well,
even if you're a corporate, we would recommend looking at the sectors I was referring to. I don't think, real estate and tourism become of, or should become of immediate, significance to foreign investors. The other sectors would probably provide much, higher risk-adjusted returns and much, more stable return profile.
Mm-hmm. And so I think we've got a minute and 7 seconds left. So let's again look forward again into the future. Over the next 12 months, what do you think is the most important thing that could happen in Egypt from the perspective of an investor? What would it be? The currency? Would it be other initiatives of the government, or is it just a general improvement in sentiment?
The thing that we should all wait for is the improvement in the way business is being done in Egypt. So that would include, obviously currency, a clearer tax regime, a clearer energy plan. That would include a lot of things. And I personally, I have the view that a lot of work has been done, and all of this should, start kicking in one thing after the other during the coming year.
And where do you see the investment coming from? I mean, historically, of course, the Gulf had large surpluses. That is not the case anymore. There's considerable liquidity constraints there. Europe is we're not quite sure whether Europe is growing or not. I think it's significantly better than it was 12 months ago. But okay, so where is the appetite? I mean, is Asia, the US? Where are you seeing interest from particularly?
Well, I know there are challenges in the Gulf, but at the same time, there is a lot of interest in, the Egyptian market after all. It is a big market. I mean, it's almost one-fourth of the, entire population of the Arab world. So I expect, investments from the GCC will continue. Investments from Europe will continue as well. And when we talk about, portfolio investments and investments in debt instruments, bear in mind that, the extremely low interest rate environment in, developed markets, a market, like Egypt, assuming, the FX issues have been sorted out and repatriation has been sorted out, provides obviously, much better room to make, returns on debt instruments as well.
As Chris said at the beginning, quoting his friend Jerome Booth, you get paid to take the risk. Tarek, we have come to the end of our short session, but thank you very much for that whistle-stop tour across the investment environment. I think we're now having a coffee break. And what time are we going to be back in here? Half an hour. So we've got full 30 minutes, but Christopher will be leading the first panel here. But please join me in thanking Tarek Tantawy for joining us on the stage. Tarek, thank you very much.
Thank you so much.